Hi guys, welcome you all. On 25 and 26 of Jan, the Fed meeting was done, and after that meeting, there was a press conference of Jerome Powell, who is the chairman of Fed. And after that, and there was some of the questions asked by some of the people who were into that particular meeting, and there was some of the questions which was answered, and literally, man. The moment he was speaking something which was bearish for the market, the moment he was speaking something which was not great for the market was going down. If you just look at the chart of US stock market of yesterday, it was 2.5% up initially, and after the meeting it has gone in negative. Many of the stock has gone into negative. So this meeting was definitely important meeting, and if and Indian market has been going down continuously down because of this particular thing only. Even all the other Asian stock market which has gone down today has also gone down, has been going down because of this particular because of the Fed only. So USA this particular meeting, the Fed, Jerome Powell do not only influence the US economy, it influences the economy all over the world. And as a result of which, these meetings are really important. US economy is really important. And in this video, I'm going to tell you that what is the work of a Fed, why the Fed was really made for. First of all, we'll discuss about that. Second, we'll discuss about what happened in 2020 which led to all these things now. The third thing we are going to discuss about is what was discussed in the Fed meeting, and the fourth we are going to discuss about what is going to be the future. So this video is kind of divided into the 4 parts. So let's get started without further ado. So first of all, first part, what is the work of a Fed? Why the Fed was made? So the two most important work of a Fed. First of all, Fed claims they are not influenced by politics. That is the one of the thing on paper. The second thing is the Fed need to control the unemployment, control the inflation, and both they need to keep down. Okay, first is they need to keep the inflation down, they need to keep the unemployment down. This is the work of Fed, and all the things which are done are basically done for this particular thing only. Now let's move to the 2020. In March of 2020, we saw COVID-19, as a result of which not just India, countries across the world were shut down. Aeroplanes, the international trades were shut down. All the airports were shut down, and there was no international trades, and all these things were happening. All the things were shut down basically, and there was lots of restrictions. As a result of which, lots of business were disrupted. Lots of business has gone down because of this particular reason. We know that, right? Business environment was not at all good in that time. If you just look at the stock market, it was completely in this way, completely down, completely a complete crash into the stock market took place. Not just Indian stock market across the world, we saw a crash into the stock market. After that particular days and all, after that we saw the spike in the stock market. In the last 1.5 years, the stock market has touched a crazy heights, literally. Sensex 60,000, man. Can you imagine? Okay, we have saw 10,000 spike so fast. Just like 1 or 2 months, it was 10,000 plus spike took place into the market. So in short, lot of money was put into the Indian stock market. Lot of money was put into the US stock market and other stock market across the world. इतना पैसा आया कहाँ से? So simple है. This particular money was being put by the Fed. So what happened, as I said, that the two most important work of a Fed is that to control the inflation, to control the unemployment. Now when the business environment is not good, these two things really goes out of control. Okay, just look at unemployment. Unemployment was at its at very high, and the reason we all know, because businesses were shut down. So business were shut down, business do not have the money. वो लोग hire कैसे करेंगे लोगों को? And as a result of which unemployment were at its peak. And because of this, the Fed started putting the money into the market. Now, how Fed started putting the money into the market? They started bond buying program. $125 billion bond buying was done per month. $125 billion bond buying was done per month, and as a result of which, there's a lot of money being put into the market. A lot of money was put into the business, and that's why we saw the market going really up. We saw the market doing really well after that, because this much amount of money was put into the market. And obviously यार इतनी ज़्यादा पैसे जब market में डालोगे तो all things will do well. Unemployment नीचे चली गई, because unemployment gone down, because definitely then these businesses started hiring more people. They started increasing the wage of employees, and all these things happened. Business environment was back onto the growth path. We saw businesses doing really great. We saw unemployment going really down. We saw inflation going really up, because the simple concept is there are 3 types of inflation. But first is this, here we see the wage cost inflation, wage push inflation. What is wage push inflation? in the economy, when there's a lot of money into the market, as a result of which the wage of employees are increased. Now wage of employees are increased, they have a lot of money, और लोग के हाथ में अगर पैसे दे दोगे, then they will definitely spend it. They will spend it on different essentials, they will spend it on different luxuries, and as a result of which cost of items will increase. Okay, there's also one of the inflation which took place, which was input cost inflation. The reason was simply the cost of raw material started increasing, and all these things was led by the simple concept called demand and supply. We all know that, but it's I will tell you what is the how the demand and supply thing worked. Okay, like for example, let's take an example of coal. There's a coal shortage which took place. Now why coal shortage took place? Because the consumption of the electricity in the household increased. The consumption of laptops, mobile, electronics increased rapidly, and as a result of which the electricity which is generated by the coal led to the coal shortage, and that was one of the reason. There's a semiconductor shortage because now all industry need the semiconductor, because the production of the electronics increased, the production of car increased, the demand for car increased. So definitely when there's a money in the market, when there's a money in the hands of a people, the cost of certain items increase, the cost of essential items increase, and as the cost of certain items increase, and as a result of which there's an inflation into the market. The cost of food increased for that matter. Now why the cost of food increased? Because the cost of raw material which is used to make this food increased, and certainly that particular cost was then transferred to the consumer, and the cost of food also increased. So this was one of the things which happened not just in US economy, it happened in across the economies. But US is just simply a different case. They also announced a stimulus package as well, which also was which also put more liquidity into the market. They announced $125 billion bond buying. The another thing which they did is that interest rate to zero. So interest rate was zero, as a result of which loan were very much cheap, and there was a liquidity in the market. पैसा था market में, loan भी cheap थे, all things were great for the growth prospect of the business. But then comes December. In the December first week, there was one data which was released. The first, or I guess second week, there was one data which was released. In that particular data, unemployment was its all-time low. Okay, unemployment was at this much and inflation was at this much. If you just look at the US economy, it's a stable economy. It's a developed country, it's not a developing country. India is a developing country, and in India we have the inflation bracket of 4 to 6%, and we always try to keep RBI try to keep the inflation in the bracket of 4 to 6%. Same job is of Fed that the inflation should be within 2%. When the December data came, the unemployment was at low, inflation was at 6.8%. A 38 to 40 years high inflation was reported in December. The data was of November, and so it's like the November inflation data is published in December inflation data is published in Jan. Okay, this is the kind of thing which happens. And then there was a Fed meeting which took place on 14th and 15th of December, and the meeting and after that meeting there was a press conference which was done, like it was done yesterday. And in that press conference, the one thing which was decided is that they are going to do 3 interest rate hike. Along with that, they are going to increase the pace of tapering. Now what is tapering? They are going to basically reduce the pace of bond buying program. Okay, so all those bond buying which was done, now they are going to reduce the bond buying program. They are going to shut the bond buying, and that which will definitely not great for the liquidity of the market, but market expected that thing. But the one thing market didn't expect it was the interest rate hike. They're going to do 3 interest rate hike, and when the 3 interest rate hikes are done, it's not good for the market, because loan will get much more expensive. When loan will get much more expensive, it is not going to great for the business environment, right? And that's why we saw that in December the stock market gone down. There was a lot of FI selling was taking place, and after in Jan as well we saw the same trend. At the same time, we also saw one more thing, was that when in Jan the December inflation data, which was CPI inflation data of US, was published, and it was 7%. So inflation in December was 7%. So inflation was higher than the what it was reported in December, and because of which we saw the market going down. Now in last 2 to 3 days, market has been behaving so differently. If you just look at on 24th, if you just look at the US stock market, it was 4% down, and then it suddenly got reversed to positive actually. So 4% completely recovered, and then it gone to the positive. This was something which happened in the US market, and as a result of which you just saw on 25 when the Indian stock market was opened, we saw the Indian stock market even going up. and people might be many of the retail investor might be thinking chalo market acha ho raha hai, okay, market is going at a good level, but that was not a reality actually. Even yesterday as well, the US stock market was really up. If you just look at the US stock market, it was 2.5% up till the time Jerome Powell didn't came and gave his press conference. Okay, till that time, the market were 2.5% up. The market was actually expecting that Jerome Powell might sound less bearish, less hawkish about the inflation, about the stock market. Hawkish in the sense less worry about the inflation. That was the kind of basically expected by the market. But it didn't happen. Now let's come to the meeting, which is the important part of this particular video. On 25 and on 26, there was meeting of Fed was done, and then there was a press conference yesterday. In that meeting, it was decided that in that meeting there are some questions asked, and I would like to conclude that what was the conclusion of that meeting. I watched that meeting and it was like a 1 hour or plus meeting, and I watched that meeting completely, and I found it some conclusion. The first conclusion is that it might be the case that they might increase the interest rate they might not increase the interest rate from 0.25%. They might increase the interest rate to 0.5%. So it's not going to be great for the market, not a great news. Now, the second thing Jerome Powell said is that the economy, the business environment is now in a much better shape. The unemployment is at a much low. So even if they increase the interest rate, even if they continue the tapering program, it is not going to disrupt the unemployment. That is the major job of the Fed. So that was what was conveyed by Jerome Powell, and that's not good, because this clearly indicate कि they are thinking about the interest rate hike. At the same time, he also said that stock market is do not comes under the Fed, in the sense that it's not a job of a Fed. Indirectly said that it is not a job of a Fed कि आपके portfolio में क्या हो रहा है. It is not a job of a Fed कि what is whether the stock market is going down or whether the stock market is going up. The main job of a Fed is to control the inflation, to control the unemployment. We have achieved one thing, that we have took the unemployment down. Now the another job is to control the inflation. We are going to take the step for that. That was a simple conveyed by Jerome Powell. Now there was one of the important question asked was that what they think, what is the inflation like, is the inflation worst, is the inflation getting better, what is his thought. In that he said that inflation is worse than December. So just think, in December they took the decision seeing the 6.8% inflation, then it was 7% inflation in Jan, and after seeing that particular data, they took this particular decision that we need to do the 3 interest rate hike and fasten the tapering program. Now he's saying that inflation is even worse than that. So just look at the consequences this particular sentence can have. And after this sentence, man, I saw the stock market continuously going down. These 3 sentences do not came at the same time, because different people asked the question and then there was these 3 sentences came. But after some sentence the market was doing better, but after some sentence the market was going down, and I saw that thing happening. So definitely market got bearish. After that market there was a selling pressure took place into the market, and even the Asian market opened at trade, Indian market opened at trade. These are the 3 conclusion. At the same time, I also like to tell you that there is a zero tolerance policy in China, as a result of which many of the items are just as a result of which ports are not working that well. There is an issue with Russia and Ukraine issue is also there, which is again not great for the stock market. So there's a lot more issue. Crude oil price is going crazy up. It has touched almost $90 a barrel. These things are not great for the environment, and along with that we are seeing now Fed doing the tapering continuously. At the same time, they are doing that they might increase the interest rate hike. Okay, and he's saying that inflation is even worse. So interest rate hike, it might be 2 interest rate hike, it might be 3 interest rate hike, or it might be even more than 3 interest rate hikes. Goldman Sachs has already said that Fed might consider even 4 interest rate hike. And seeing the kind of the tone of Jerome Powell, or the way all the things he said in the last press conference, many people are even predicting it might be 4 or 5 interest rate hike might take place. In the 2018 as well, the interest rate hike took place, and as a result of which we saw that the market going down, the US stock market going down, reacted completely to that. But it was again decided by the Fed that okay, we are not going to do the interest rate hike, and they actually reduced the interest rate, and as a result of which the stock market again gone up. But I personally think that might not the case this year, because the situation is really worst. If this thing happens, it's really going to be great for the market, but I do not think that particular thing happening. And even I personally think that Indian market, many of the stocks in Indian market which are really good but are at a higher valuation, and many of the people have even many of the FIs have said that Indian markets are at a higher valuation, Indian stocks are at a higher valuation, they are a bit expensive. So that's definitely will take some of the stocks down, which are really at a higher valuation. So that's why actually in Jan only I started selling some of my stocks, and uh, basically so that I should have the cash so that I can buy in a dip. What are the next events you need to keep your eye on? First of all, keep your eye on the budget. The second thing you need to keep your eye on is the CPI inflation data, which will of Feb, and CPI inflation data of March. Okay, because these two inflation data, and after there is going to be a March 16 meeting of Fed. That is again going to be a big meeting for world stock market. Okay, and that particular meeting, what is decided in that meeting is going to be really important. So keep your eye on these particular things. This was it from this particular video. If you like the video, like it, subscribe to my channel, and share with your friends, man. Share this information. This is really important information, and it will really help each and every people who are into the stock market. Thank you very much for watching my video, and bye bye.